I recently mentioned that Palantir has a lot of insider transactions. So in this video, I'm going to show you exactly how I'm making $350 per day selling options on Palantir. I'm going to go over some analysis of Palantir and show you covered calls and selling puts, which is my bread and butter for option selling strategies, which is how you make consistent income. Now, my portfolio has been doing very well. I'm currently sitting at $2.8 million, and I do have a pretty sizable position on Palantir right now. So we're gonna be jumping into my screen right now. I'm going to be showing you specifically what I'm doing. I currently have an average cost of $21.67 on Palantir. I have 5,000 shares, and I have a six-figure position here, up $29,000. Now, what I'm doing with Palantir right now is I have covered calls as well as I have sold puts. Now, the thing is with Palantir, we have seen Alex Karp, we've seen Sankar, the co-founder Steve Cohen, and we've also seen the CRO purchasing shares, which is a very bullish sign. When you see insiders making transactions inside of a company, especially purchases, that's a strong sign because they have more information than me and you have. And these insiders are buying Palantir at the moment. So looking at selling puts and covered calls, this is one of the best strategies that you can use because when you're selling options, you're collecting income. If I go to my history, you will see that I have sold options on Palantir over and over again. Let me go through my receipts right now. So you can see a covered call roll here, a cash secured put, a cash secured put, a covered call. I bought a Palantir put. I closed this out. I've sold the 614. And you can basically see over and over that I've been running a lot of selling option strategies here. So going back to Palantir, I want to show you right now the position that I have is, well, there's two positions. There's selling puts. When you sell a put option, I'm basically saying I'm happy to buy Palantir. I love selling puts, and that's how I begin the wheel strategy. The wheel strategy is just selling put options to enter into a stock and doing covered calls to exit a stock. So basically those two things make up a wheel strategy. The wheel is the easiest strategy because it's kind of like a money machine. You're just kind of rinsing and repeating, sell put, sell covered call, and just doing that over and over on repeats, which makes it very, very easy. Now, the thing is, I'm a little bit of hot water because my covered call at $23 is in the money. But you can see here that I have sold only partial covered call of 23 contracts on my 5,000 shares. So something that's really interesting that I learned at Goldman Sachs is that if you have a pretty big position, you might not want to sell a covered call at just one strike. So you may decide that you can sell the 25 strike, for example, the 26, the 27, the 28. You can sell multiple different strike prices to basically have different exit prices or different exit points for a stock. So, or in my case, if you don't want to exit the stock, you can simply roll a covered call higher. So right now I have a covered call at 27 and I have a covered call at 23. I can actually show you guys a live roll right now. So I can go to the 23 covered call, and although I am making money, I don't want to lose my shares, okay? So you're going to learn a lot here. You're going to learn about making consistent income. You can roll an option higher. So the wheel strategy is you sell puts, you sell covered calls, but what if you don't want to get rid of the covered call? What if you don't want to lose your shares for whatever reason? Maybe you don't want to pay taxes, which is very viable, right? Since when you sell, you do have to pay taxes. So in this scenario, I don't want to pay taxes. I don't want to lose Palantir at $23 strike price. So what I'm going to do, and I'm using Robinhood, you can use anything. I'm not sponsored by any brokerage. You can go here, and now we can pick a strike price. So I'm gonna make the screen bigger here. So we can choose a different strike price. So we can actually adjust the position. Right now it's at August 16. We can go for something like August or September 20. So we can increase the expiration by 30 days. I personally like to go out by 30 days. I think rolling out an option by 30 days is very good. It's very optimal. It gives it enough time to basically fix a position. So you can see here how I can move from 23 to, say, for example, 24, okay? Here, I will have to pay a debit. So I will have to pay 35-cent debit. But the thing is, I'm moving up by $1. So you have to ask yourself, are you willing to pay 33 cents to free up $1? In this example, yes, I think this makes a lot of sense, and it's also 35 days out. But if you don't want to pay a debit, you would have to increase the amount of time. So I can go for November 15, for example, and now in the November 15, I can move up to, say, 25. But here you'll see that I'm moving up by $2 now, and I'm actually getting paid for that. So this is exactly how a roll would work. This roll looks really nice, and I'm just gonna say that for me, Palantir is one of the best companies. The reason why I own a lot of it and I plan to buy more of it is that you look at its core strengths, it really lies in the exceptional ability to integrate, process, and analyze vast amounts of data from different sources. And those sources are not always easy to get a hold of. So Palantir really is good at digging up that data and then giving it to the end user, a decision maker who can actually make sense of that data. And that's very, very powerful. So many companies face challenges with soil data and fragmented systems. Like that data is not organized. And Palantir's ability to unify these data sources is what gives the businesses leverage to then use data as a decision-making tool. And once Palantir gets into a business, it's really, really difficult to get it out of that business. They implement their systems and they're basically there for a very long time, which is, again, looking at the government contracts that they're winning, they're gonna be extended. And when you have an extension of a government contract, that's where a lot of money can be made. Looking at AI machine learning applications, they flourish when they have excess data, and that's exactly what Palantir is doing. So for me, another reason why I'm selling covered calls, I'm selling put options. Actually, let me show you guys, actually let me execute on a trade right now. I'm gonna execute on two different trades. I'm gonna show you two very valuable lessons on making money, okay? First one is I will roll it to 25, so I'm gonna get paid a credit right now. I'm gonna do this at, actually it looks like if I do this at 0, that means I collect nothing. If I do it at 0.05, that means I would collect like $5 per contract credit. So I'm going to click credit right here and I'm going to submit this order right now. I'm basically rolling up. I guess that got filled. So I'm basically rolling it up there. But also what I'm trying to do is I'm trying to get more exposure into the stock. I like the stock. I want to own more shares of it. So what I'm going to do right now is I'm simply going to sell a put option to begin running the wheel strategy. Let's go to sell put. I'm going to go to the expiration date. Let's just say I'm going to go very short term. You can go short term. You can go 1 to 6 weeks on selling options. You can go 8 weeks as well. You get paid indirectly to the proportion of how much time you get. So for example, you get $1,000 a month, $2,000 in 2 months, or $2,000 in 3 months. It's not a whole lot of difference, is it? So I really don't mind as long as you're in that short pocket of under 3 months, because options do have a, they decay. So that decay does happen very quickly in the last 3 months. So I'm just gonna sell a put option. I wanna get assigned. I literally don't mind getting assigned Palantir. So I'm gonna go like this, continue. I'm gonna put in 10 contracts here. And listen, this is a way of dollar cost averaging. By selling put options, if I get assigned, that's dollar cost averaging. Don't get confused with dollar cost averaging and reducing your cost basis, because here, if I get assigned Palantir, my cost basis will go up. But that's fine with me because I want more Palantir shares. This is a core holding of mine. I really like it. So I'm gonna go ahead and put it for 31 cents, and then I'm gonna submit this right here. And there you go, I got filled for 10 more contracts of Palantir. And essentially what I'm saying here is I'm ready to buy Palantir, and I'm ready to buy it at the 26.5 strike price. So I'm ready to buy it lower than what it's trading at right now. And basically I could honestly do this every single day. So I can make $300, $350 a day by selling put options every day. You do need probably a little bit bigger of an account, but on the upside, if you're doing covered calls, you get a lot of money. So you can make more than $350 a day. If you own shares and the stock is appreciating, I mean, I'm up 30 grand in like a couple of months, right? And the position is sizable, but I think a lot of people with enough capital, even if you have a small portfolio, you can trade Palantir and make really good money on the wheel strategy, which is essentially selling put options and selling covered call options. So just the basics, selling puts, selling calls, bread and butter, keeping it very simple, and just paying attention to the insider transactions of Palantir, paying attention to their earnings, which continue to be very good, what their management is saying. I mean, there's just a whole lot of good stuff here on the stock. So I'm very bullish, and I hope that you found some value in this video.